Well, good day, y'all. Ira Epstein of Linn Associates with your financial market update, and this is for Wednesday, and this is the 13th of February, 2019, and we're just getting on to 4:45 p.m. Central Standard Time. So these boards will erase in a few minutes, and they'll be setting themselves up for the next 15 minutes to open trading at 5. It was a very mixed day, and I think part of the culprit is the unbelievable strength in the dollar. Dollar just keeps climbing, and sooner rather than later you're going to hear corporations talk about the problem. Yes, what the market's dealing with right now are the elephants in the room, the budget, which I think most people think in some manner they're hoping it gets passed or a short-term extension of it. The longer Congress waits, just nobody can read 700 pages and vote on it. It's that simple. Do I think the president will sign it? I don't know what it says, so I can't tell you that. The second part of what you're looking at is China, of course, and we get into the bigwig meetings on Thursday and Friday when the head negotiators from the U.S. and China sit down. At this point, it's been what I'll call, and I'm not saying this in any manner derogatory, it's the second tier. The main line goes in tomorrow. Can they get anything done? Does this thing end up where come March 1st, the president has reason to not put on the tariffs? The stock market has been building hopes on that. The world wants to see a trade deal. That doesn't mean it will happen so fast. Energy is very, very strong, even with, and you got to always pay attention. When you get a government report, the EIA came out and it showed a much bigger build in crude than supplies. I'm talking crude, heating oil, and distillates than the market thought, and you're still up. It's telling the market's looking at something else. So as we look at this market, we're climbing into this zone that I've been telling you about. This is that resistance area. You'll see where the 200-day moving average is and where the market's been. But as much as I keep talking about the resistance, the market's still able to eke out these advantage gains, and it's up 43 points in the S&P for the week. You haven't shown a sign here that this rally's run out of any momentum, but you're entering this whole resistance upper band right here that the market has failed from before. So if you're going to be a bit cautious, this is it. And I realize there's many people, in fact, I was on the floor today, and they're telling me we're going through all-time highs, and these traders are going, the public isn't in the market. The fact that they're talking that all-time high scares me. That doesn't mean they're wrong, but I wonder. When we look at the swing lines, the one thing I look at is take off the name of the chart. You just have higher lows, higher highs, and you've had this. In fact, you've had this since Christmas. So this Christmas rally, as far as I'm concerned, nobody says that, hasn't ended yet. We're getting to the point where will the 18-day moving average of closes in red get over the 100-day, which would be a bullish crossover. They're about to kiss, and if you look at the value, the S&P is gaining about 6 to 7 points a day, so that's going to put it right up tomorrow, still under it for a moment there when it reopens tonight, in my opinion, but it's kissing it. You got to pay attention. Where's the resistance? I'm right there. I've got the 200-day moving average in the upper Bollinger Band. Resistance is not a sign the market's going to turn. Resistance is what it says. The market has worked up this whole wall, gotten to that big 200-day moving average, which is almost a year's worth of trading that it's looking at, and that upper Bollinger Band again. So I look at that as a zone to pay attention. What about momentum? Let's take that part. Both numbers today we're over 80. See that? Yesterday, both numbers over 80, not the day before. In order to embed, which is important to me, you have to have another day of it. I'm in resistance, overbought as can be, in an uptrend, and is this going to be where the market can launch again, or is this where the market stalls out? In the NASDAQ, we're not far away. Here's your 200-day and your upper Bollinger Band. You're just plain overbought in this market. It's had a nice run, but I guarantee if I'm looking at this, I know other traders are. That doesn't mean it stops the market, but it's certainly an area where if you're thinking of taking money off as money managers and you've had this heck of a run, some do that. That's all. What about the Dow? You're up to the Bollinger Band. You'd been over the 200-day. The battle for that one was fought here. It's a little different. The market got up and had this whole battle at the 200-day here. It finally said, nah, I think I can get through you. And now the next number would be the upper Bollinger Band. Again, overbought. You've hit your target. I am not looking for an immediate collapse in the markets, but I think this is a zone where traders are wondering, the old buy the rumor, sell the fact. We're anticipating there's something good in China. We're anticipating a trade deal. Is that already baked in, or is there more to come? I'll let you figure that one out. All I can tell you is the trend is up until it's not up on these charts. Same in the Russell. The Russell got up to, and it's up, stalling a bit here at the upper Bollinger Band, but unlike the other markets, what it has is the embedded reading already. Look at these numbers are all staying over the 80s. So this market from last Friday began its process of embedding. It completed it, and it's still adding to that. If there were a breakthrough or something good happens and these markets lift, the 200-day average is 1596. That's 50 points away. In the VIX, it has shown no sign yet of losing the downside momentum. It has stalled in terms of price. You're not going any further. That should not be a surprise. When you get my morning subscriber video, I've been taking you through and showing you what the 2018 trading top was in the VIX, and I'm talking the general trading range top. Yes, could it spike above it? Yeah, but we're talking where the market was trading within, because it was a low, if not the lowest volatility year I can recall in that index. And now we're back to the top of that. That's often a support zone. Resistance back at 1715 to be a big warning sign for this market if it got over 1789 and you lost that embedded reading. In the T-bonds, you've pulled back to neutral, the 18-day average of closes. Momentum is leading price down. The trend is still up. The bias right now, we closed at 145.24, just over the 18-day average. It's up. I'll still give the bulls the nod in this market until you take out this most recent low or change the chart pattern. Same thing in the 10-year notes. Momentum is leading price to the downside. The market stopped just as I teach in the charting course. This was one of those classic where every now and then it does what you teach all the time. The challenge of the Bollinger Band ended that particular leg of the rally. As we come to TLT, it was the same thing. You peaked out against the upper Bollinger Band. You've fallen back to the 18-day average of closes. The market is trying now to figure out what next. It does not have a trend here. You have a lower low, higher high. I define trend, forget momentum and everything else. Do you have higher highs, higher lows, lower highs, lower lows, and no trend is in some manner a higher high and a lower low. Got that? And you're back to neutral in the chart, but momentum is still pointing down. In the dollar index, you've been pushing on the upper Bollinger Band for 3 to 4 days now. In fact, you actually have been doing it for 5 if you want to look. But now you're trying to say, can I go to another level? Now, when we look at momentum, you're just overbought. You have not embedded. You're at an important number right here. Is this market going to be able to get through these old highs and add to that? Some traders think so, but if you go back and you read your December readings, you know how they do them in Barron's and the other magazines, they were not talking the dollar going up like this year. This was supposed to be, I think, the year of the dollar being down, according to many of the people that have the ability to look a year down the road. I'm not one of those people. In the March eurocurrency, we came down to the lower Bollinger Band. We're challenging it. You're under 113. What can the euro zone do to support their currency, or do they want to? You know, sometimes you get a lower break in your market and you say, hey, that's not bad for us. Our goods are priced competitively. So I don't know that you're seeing anybody run. We've been doing this break. It's a vertical price drop. Yesterday you had an outside day up. You did not take that out today. But if you take out yesterday's low of 1289.50, then that was a bull trap, and I don't know where that carries the market. In the British pound, resistance is pretty clear. It's the 100-day average of closes. You're oversold. You're going to have Thursday, which is tomorrow. I think it's another vote of some type that goes on in the House of Commons. It's a mess there. Nobody knows what's going on. In the end, You just keep falling down here, and look at how now you're at the 100-day average. It's interesting to me how you stop at Bollinger Bands or extend to these moving averages for your next level of support. But nothing is winning against the dollar. That's the important thing. If Bitcoin gets under 35.50, it actually could set up lower highs, lower lows, potentially back to the 18-day average to regroup. In the energy markets, as I said in my other report, maybe at the beginning of this one, you had the EIA numbers come out today, and there was a big build. Not a draw, not like the API number. It didn't make sense with what's going on there, where you get a build in the market and yet you're able to move out in price, and that's what's going on. So the market's looking over its shoulder probably at what's going on with OPEC cutting back, hoping for a deal between U.S. and China, pick up world economies and create more demand. I have told you that one of the things I'm looking at is this sideways action. It is from this picture that big moves occur. Now, is it going to be to the upside? Well, right now the market's trying to say it's trying to push out the upper Bollinger Band. It still has a lower low, higher high. It's up at resistance. We'll see what happens there. In WTI, lower low, higher high, market up 80 points on what I call bear news. Whenever I get a bearish report and the market goes the other way, my hair, and I got a lot of it, perks up. Something's going on. Resistance up here at 55.06. Obviously, the elephant there is there going to be a deal with China or an extension of the truce? And how does the market going to view that down the road? Rebob gasoline getting into overbought territory, went up, stopped at the upper Bollinger Band today. It's been in an uptrend, but look at this pattern. You keep seeing it in all these energies. Something big is brewing. I think you're getting a lot of traders buying puts and calls, trying to take advantage, if you will, let it break out one way or the other and see what happens. In the nat gas, you have the higher high, lower low. Even with more cold weather on the way, this market has not been able to pick itself up. We'll see what the supplies look like tomorrow. As I told you, I start off the day for you doing what I do myself at night. You know, I read a lot of market letters. I'm reading all the time, One People's Idea. Gee, that's something I didn't see. I subscribe galore. And the reason is knowledge, idea. I get my own trading ideas from my charts. Now, is there something else to mix in with that that makes a little bit of sense? So in the morning, I'm assuming you have a cup of coffee, you sit down, and this is just how my charts look. And this is the sequence that I review 40 charts on. And unlike these videos, I can say, buy here, sell there, here's the stop. This trade didn't work. This one worked. Keep your risks at this point. And I'll give you what I see in the chart action, what I think the pros are doing, technical and fundamental. I'm going to review a bit of both for you. Ideas, that's where I'm able to let fly. So I do that. The idea here is if you have your own idea and maybe you need a push, you like it, you don't like it, you're on the edge, maybe listening to somebody else gets your idea into action for you. One thought. Maybe you like my idea. Another thought. How do you get this? $7.95 for the first 30 days, 26 cents a day or something. If you like it after that, we're installing now a one-year subscription that'll be reduced from the $15 every day after that to $13 a day. So all this is not a day, $13 every 30 days. So that's all coming very, very quickly at you. I really work on this video, this one that we do here. I hope you have a lot of fun with it. To find out more, you can either call us, you can go to our website, and under Education or Research, Morning Subscriber Video, I'm Ira Epstein. See you tomorrow, and remember, we have that live webinar, 12:30 p.m. If you haven't got yourself registered and you didn't get an email, call my staff, 866-973-2077, 12:30 p.m. Central Standard Time. Lasts about 30-40 minutes. Have a good day.